very warm welcome to the show. Thank you very much for joining us this evening. This is The Point, and my name is Anthony Sebali. Now, the government of Uganda, in order to attain the middle income status, has banked on microfinance institutions that are spread across the country to deliver
Smart 24, driving business. Smart 24, driving business. Smart 24, driving business. Smart 24, driving business.
Welcome to the show, and thank you very much for joining us this evening. This is The Point, and my name is Anthony, and I am your host. We discuss, of course, matters concerning policy and, of course, what drives business here in Uganda. And today we are talking the microfinance institutions people out of poverty. However, according to the Uganda National Household Survey 2019-2020 that was conducted by the Uganda Bureau of Statistics, we still have currently about between 8.3 to 8.5 million Ugandans living below the poverty line. And of course, this is exactly what the institutions are meant to attack. So where is the problem, and how can we address some of those problems? Of course, joining me on set today is a gentleman who is an expert in investment, Mr. Alex Muhwezi, to just throw a little bit more light around some of the mysteries in the microfinance institutions here in Uganda and what can be really done to make them sustainable. Mr. Alex Muhwezi, you're most welcome to the show.
Yeah, thank you so much, Anthony, for the show today. Thank you for the invitation. I'm happy to be here once again. Permit me to greet our viewers, our listeners, good evening. Thank you so much for giving us your time to listen to us this evening as we share the best knowledge and practices that we know about microfinance and savings in our country.
Yes. Mr. Muhwezi, if you can just tell us about yourself and currently what you're doing.
Thank you so much, Anthony, for that wonderful question. Like you said in the beginning, my name is Alex Edgar Muhwezi. I am an investment expert. I am a student of business management and project management. I am a banker by experience. Currently, in addition to the banking work that I do, I also do consultancies in the areas of investment and financial solutions delivery. That's really what keeps me busy on a daily basis from Monday to Saturday. And I'm happy to be here discussing this specific topic because it's one of the things that keep me busy.
Yes, basically money keeps you busy.
Yes.
Because when you talk about banking, business management, you're handling money.
Yes.
Very interesting.
Yeah.
I want to start our discussion with, we are talking about microfinance institutions, but let's start from the top downwards.
Yeah.
The Bank of Uganda defines different institutions and groups them in different categories, which are called tiers. There's the tier 1, the tier 2, the tier 3, and the tier 4. And microfinance really comes in the tier 4. But could you start and break down for us some of the categories here, starting from tier 1, and what distinguishes each of these?
Yeah, thank you so much, Anthony, for that question. The operations of Bank of Uganda are guided by the Financial Institutions Act of 2004. Now, this act, this law stipulates the different players within our financial sector. So you have a tier 1. Tier 1, these are basically commercial banks. And what distinguishes commercial banks, for example, from credit institutions, is the level of capital. As we speak today, for you to start a commercial bank in this country, you need a minimum of 20 billion Uganda shillings. Now that is minimum reserve that you maintain with the central bank. So basically that is commercial banks. Now we move to tier 2, these are credit institutions. These are players in the industry that are registered, established, majorly to extend credit to customers, to different groups of people. So these do not take deposits. They mainly focus on extending credit. Then you have tier 3. These are what we call the MDIs, the micro deposit taking institutions. Now, these are peak deposits, are licensed peak deposits from the public, and they are also licensed to use those deposits to extend credit up to certain limits. So So those are the differences between tier 1, tier 2, and then tier 3. And then we have the last one.
Before you go to tier 4,
yes,
the MDIs look to be like commercial banks, because I think commercial banks do take credit.
yes.
They also they have depositories. In other words, people can deposit money. So what's the distinguishing?
Now the difference is that commercial banks go to a clearing house in the central bank. I can bank a check in a commercial bank, and this check is easily cleared within the clearing house at central bank. A microfinance deposit taking institution does not issue checks to its customers. So that's one of the differences. Number 2, MDIs do not do forex transactions. You cannot do, for example, a transfer of dollars from an MDI to, for example, China. That is not possible because they don't have access to the clearing house. So those are some of the differences. And then, of course, the minimum capital requirement is also different. If I can recall very well, I think the minimum capital requirement for MDIs is less than 10 billion. But for commercial banks, it's 25 billion minimum capital requirement. Yeah, so those are some of the differences. Okay. Yeah.
So the tier 4 now, the microfinance.
The tier 4, this is where we have the microfinance institutions. This is where we have the SACCOs, savings and credit institutions. This is where we have the village lending organizations. This is where we have the money lenders and all these groups of lenders that do it at that level of lending. Now the difference here is that at tier 4, these ones do not pick deposits from the public. These ones only lend and then manage savings of members who have agreed to form an organization together. So that's how I could describe tier 4.
Maybe to just also further clarify the difference between a SACCO and the microfinance maybe institution. Are these two the same, or one is embedded in the other?
The difference is in terms of membership, and then the size of capital. Without giving names, you'll find a microfinance institution, for example, having a deposit base of over $1 billion. Then you have a SACCO that can actually start and it is maintaining, say, savings of about 10 million. So the issue is about the size of capital and then also the process of registration. Of course, a microfinance institution has to be legally registered. You have got to have a company incorporated so that it can go into the business of microfinance. But a SACCO, it's friends agreeing, coming together and registering by laws, and from there they start a SACCO and they start saving and doing lending amongst themselves.
Now, when you talk about lending, there is that aspect of people having to deposit money first, and the conditionalities. The microfinance institutions, are they operating like SACCOs? Do they have the aspect of people coming together, or actually they are public institutions whereby anyone can access them? Is that also a distinguishing factor?
Yes, it's actually a distinguishing factor because microfinance institutions are open to the public, but SACCOs operate on the principle of membership.
In other words, if you're not a member of a SACCO,
you cannot access the services of a SACCO. Yeah.
Okay, that's very, very clear. Now, for the last couple of years, 10 years or so, government has put in a lot of effort, a lot of money under different programs. We've had youth livelihood program, we've had a Myoga, we are having the parish development model coming up, and all this is to boost microfinance. And even the president has come out very strongly, the prime minister and so many other dignitaries, saying that our future is in those small institutions. Organizing ourselves in small groups will help us to come out of poverty. And of course, even when the Minister of Finance was reading the budget this year, strongly put it that this year we are coming out of poverty under the parish development model. Do you buy into this? Do you think microfinance is the way to go if we are to bring our people out of poverty in Uganda?
Thank you so much, Anthony, for that question and observation. One, we have an economy where 68% of its citizens derive livelihood from agriculture. So you have 68% of your people deriving livelihood from agriculture. Number two, this 68% that we're talking about is engaged in subsistence agriculture. So they mainly produce for personal consumption, and less or little is available for the market. So this kind of situation puts government in a very challenging situation and provokes different policy makers to come up with different programs, different programs that can actually bring these people into the money economy. So over time, there have been various programs that you have talked about. And the main intention of these programs is how do we bring these people, this group of people into the money economy. So that one, we are able to ensure food security, but also this group of people is able to earn. Now, as they earn, they have money to spend. Now, once they have money to spend, you build a pool of people with purchasing power. So that becomes a very strong base for your manufacturing sector. Because if, for example, Mukwano is producing soap, that soap needs to find a market that has purchasing power to buy that soap. So the different programs that are in place are geared to bring this group of people into the money economy. Now we have programs like Myoga. Now this program targets people who are operating businesses in different skills. For example, saloon operators, you have welding, you have people who are in, for example, piggery projects, youth who are in piggery projects. Then you have people running wood workshops. Now, the purpose is to add more capacity within these sectors, organize them, build their financial capacity so that they can operate at a bigger capacity, and more, bring them in the money economy. And all these funds that we're talking about are geared towards addressing the issue of unemployment. As we speak today, youth unemployment in this country is over 80%. This country is a youthful country. Now, how do you bring this group of people into the money economy? You have youth who have had the opportunity to access education, they are educated, they are graduates, they can't find jobs. But you also have a bulk of young people who have a skill. For example, they are mechanics, they can make our doors, they can make our windows. Support them so that they can get established, and in a way, you are addressing the challenges of youth unemployment. So to get back to respond to your question, one, microfinance is very key if you are to address development challenges. If you are to develop as an economy, one fundamental resource that you need to have access to is finance. So mechanisms must be in place to allow our young people, to allow our citizens access financing. And that's why government is pushing these different funds that you have talked about. Number two, the other key resource is human resource. These funds have an element of capacity building. So as you organize people into different groups so that one, they can access funding, they can do business, but you also build their capacity. You improve on their skills, you improve on their issues like customer care, knowledge, marketing. So in a way, you are building capacity and addressing the challenges of limited skills in this country. And then, of course, the other key factor is having an enabling infrastructure. We're talking about issues of roads, access to power, access to water, for you to be able to address and energize your economy so that it can grow. So I want to state that microfinance is very key if we are to tackle some of these issues that have been a challenge to us as a country. So that is why funds like the Myoga Youth Fund, and if you read, so if you get some time and study the parish development model, you'll discover that financial inclusion is a key element in this model. Because you can do so many other things, but until you still have a significant portion of the population outside the money economy, you will need to grapple with the challenges of economic development.
Well, thank you very much, Mr. Moise. Now, we're going to take a break.
Yes.
And when we return, the issue of microfinance has been raised so high aloft, especially by government. But it hasn't also come without some criticism. And there has been, of course, rampant discussions on also the fraud in circles and some of the unethical practices by some of the people that have been entrusted with money in these initiatives, and so many other challenges that have come. You know, Emioga is going away. We are seeing parish development model. What is really not working, and how can we fix some of these problems? Ladies and gentlemen, we are still talking microfinance in Uganda and what we can do to make this sustainable and drive economic growth and drive out poverty from our country. My name is Anthony. I'm still with Mr. Alex Muhwezi. We return shortly after the quick break. Stay with us.